lower time frame, because this session we should base it upon traps, as we promised. And traps are mostly seen on the lower time frame, or easier seen on the lower time frame, is what we could see at the beginning of the week, that we had clear equal highs over here. But besides these equal highs that we had over here, we also had a very, very, very nice and clean uptrend at the beginning of the week. So what we could see is that we have one touch, a second touch, and a third touch. And on top of that third touch, we have a nice break, retest, and a consolidation above support. So that means every retail trader that was trying to trade on Monday, the trap day, were buying all here. People were going full margin on the last candle of Monday. And what can we see that happened after that candle? Because this candle did two things. Not only did this candle induce buyers, it also stop hunted the people that were already trying to sell this, that we're seeing this zone over here as some sort of resistance or psychological level, as we prefer to call it. So the people that were selling this move from the engulfing candle over here or over here were already kicked out. And people that are seeing this as a trend line and a break retest of support are buying this. So what do we want to do? We have to start looking at areas from which we may get our buy, because we are buy biased, right? Because we have analyzed on a higher time frame that is a higher probability that we will go up than we would go down. So unless we see nothing else that will change our mind, we will focus ourselves on only the buys, because we know that the sell options are just inductions. And do we want to trade inductions? No, we don't want to trade inductions, because it are inductions. We want to trade the real moves in line with the banks. So as always, what we want to do is we want to see the same concept recognized on lower time frame. So we will look for lower time frame liquidity grabs and an institutional candle. What is the first institutional candle or recognizable candle that we can see? This is the first probable candle, but as we can see, it already has its mitigation, and it's too, how do I say it? It's too close towards the zone that we are working on. So if we would go back here and reverse again, not a lot of people are already selling here. So what I prefer to see is, if we want to make a big move like this, like buying for the rest of the week, because that is what we think if we see on a weekly time frame that we want to buy, I prefer to see first a big induction. So that means that a lot of sellers need to be triggered into the market before I think about a buy. So this zone over here is too close for me. So the next candle that I can see is this candle over here. We have a small imbalance, and it is the last down candle before this impulsive move. So what we can see is, from this resistance we have over here, this retail zone, touch, break below, come back up, and this 30 minutes candle could have been 29 minutes down and ended like this. But as we can see, this candle induced sellers and then had an impulsive move away. So this is also for us a probable institutional candle if we see the same pattern happening again. But when we come near to this candle, the thing what we can see is that at first we create again equal lows, right? And below these equal lows is resting a lot of liquidity, so a lot of money. What we can see is that we broke this zone, retested it, and come back again. And towards which candle did we come? We came back in our institutional candle, right? So this would be our first buy. And what we can see is how many people are getting triggered for this sell. We have one touch, a second touch, the third touch come here. And on top of all that, we have here our retail trap. One touch, second touch, third touch, fourth touch, and here we are inducing buyers. So always try to look when we are entering near an institutional candle or a candle that we want to enter on, we need to see a retail trap. Because if we want to trade in line with the banks, people have to be trapped. Because if they are not trapping buyers or if they're not trapping sellers, how can they make money? Because there has to be people on the other side of the market for them to make a win. What we can see is we had our impulsive move. And after the impulsive move, where do we come to? We came back to our retail zone, right? So what we can see is we retraced back into this imbalance. So this means, oh, everything slow. This was our first entry. And this could be our second entry based upon this imbalance fill that we had over here. And after that, we also had again an impulsive move. And what happens over here? We come back again at this retail zone and we come back up. For the rest of the week, we can see we were only buying, right? But what we can see also is at the moment that this trend becomes clear, right over here, one touch, a second touch, third touch, fourth touch, break above a zone, so people start buying over here. What can we see that we are doing? Of course, we start selling. We have a first touch, we have a second touch, we get movement to the upside, movement to the upside, we have equal highs generated again. These equal highs are taken out. And after that, these equal highs are taken out, we get an impulsive move the other way. So this means if we take our confirmation checklist in line, we have already our institutional candle, the candles that took out the equal highs. We have an impulsive move the other way around. We have an imbalance over here between this wick and this wick. We have targets because there's money resting below this low because people are starting to buy from this and people are starting to buy from this. There's money below. So then we are trying to look for our mitigation. And what can we see happening here? We come back in our institutional candle and we come back in our imbalance. I don't know if the fips align. But the 64.9 is also aligning. And last but not least, certainly not least, we can see daily structure also in line. We have our consolidation, we have our push to the upside, and how many pushes? One push, a second push, and a third push. 3 is our golden number, right? So everybody will start to buy here. And if everybody is starting to buy at this wick, we will start selling with our stop loss above this high. But we still know that we are uptrending, right? So we know that if we want to take this trade, and I'm not saying we should, because I prefer taking the trades in line with the overall trend instead of against my overall bias. But if you would know that it's only an induction. So we have to look for the same concept again and again. So we know that below this support zone, as we can call it, there will be resting a lot of ka-ching, ka-ching, duku. So there's money below. And if there's money below, we're going to start looking at the first candle that triggers us for a potential buy. That means a candle that took out liquidity. We have some equal lows over here. We wicked below these lows, and we had an impulsive move again. So this is our potential institutional candle that can bring us back up again. But what we want to see happening first before we come there is that we want to see people triggered for a sell before we can buy. So there's money below here, and what can we see happening? We can see that we come back to our psychological level of resistance for people. We can see that dumb money, as my coach Homan would say, what would dumb money do? Dumb money would sell as fuck here, man. They would sell their house, they would sell their car, they would sell their wife over here. And what are we gonna do? At our institutional candle, when we see a nice rejection, so an impulsive move, right over here, we have this candle, we have an engulfing candle, and we see our retracement, we will enter at the body or at the 50% of this candle. So in the middle of this red candle, we would enter, stops at a maximum of 20 pips. You would be closely in, and you would get again your 1 to 3 risk reward. So it's very important to always keep in mind that people have to be trapped. So as we can see, we have one touch, a second touch, and a third touch, and a resistance in line before we can get this buy. We're not gonna buy here because everybody's gonna buy here. And if everybody is building off a building, are we gonna jump off a building? No, of course not. If everybody wants to sell here, are we gonna sell here? No, of course not. You have to do the opposite of the herd. We have to go against the retail herd to make money in this business, because the retail herd is being manipulated by banks and institutions that want to make money from our backs. But you have to be smarter than that. We're already smarter than most of the people by trading, but it's not that easy. We have to be aware and we have to be awakened that this shit gets deeper and goes deeper than we think. And that's all manipulated. They already know what they're doing and how they're doing it. All right, let me check out some other part. All right, I'm taking over Safi's part because he's not feeling very well. So I will do his part as well. What we can see here again is if we open this week, what is resting above these highs? I want to see it in the chat if people are still awake or are you sleeping. What is resting above this high? Does anybody know? What is resting above these highs? We have a lot of duku above these highs. There's a lot of liquidity, money, stop losses, buy orders, sell orders. There's a lot of money above. A lot of ka-ching, ka-ching, as Marijn says. Pesos as well. There's a lot of money. There's a lot of money. And what can we see that we were doing when we reached this point? We can see that we again got people triggered into this market, right? Because we have one touch, a second touch, a third touch, and a fourth touch, right? So a lot of people are selling here. And I'm not saying you shouldn't sell there or you should buy there or anything. I'm not saying anything. The only thing I'm saying is that a lot of people are starting to sell right here based upon their beliefs that they have within this market that they learn. And what these people have learned that are trading psychological levels like support and resistance is that they will place their stop loss above the highs. So that means their stop loss will come above these high. And most of the times above the high, they will place it a little bit higher, and that is called our liquidity pool. So there's a lot of liquidity resting above these highs. So when we see the liquidity resting above, we already know that we have a big possibility that we could be buying towards that move. But does that mean that if we are here and we just see a bullish candle, that we would instantly buy from there? No, of course not. Because we want to see our concept coming back within the market before we start thinking about a buy. So what we can see happening is we see that we have equal lows right here. So that means under these equal lows is resting ka-ching, ka-ching, Duku. A lot of Duku is resting below. So before we can think, or at least Sophie and me within our edge, we can think of buying this move. We want to see the buyers from here taken out first. And what we can see is when we reach that point of kicking out these buyers is, and it is no coincidence, people, it is no coincidence. We can see that people are getting triggered within the market, within a bear market, to sell again. Right? We have one touch, we have a second touch, we have a third touch, a fourth touch, and a fifth touch. We broke below this zone, a big zone, and we start consolidating below it. We have some nice daily structure again, and we start buying. So what we want to do is when we see this, we take our institutional candle, the last 3 candles possible, before the move up, and we wait till we get back into this move. Which means we could be buyers from here. And this is a move Sophie has taken this week. Very nice, clean move. Liked it very much when he showed me his MT4 within this sniper entry right over here. It's very clean. And as he knew which move he was taking, the first take profit would be at the equal highs. Because we want to target the stop losses of the people that were selling here. So take profit was hit right away. But we still knew that there was resting a liquidity pool above that we could go into. And what can we see happening when we are reaching towards this liquidity pool? It's a fucking trap city. Amen. We can see, or we can draw, a nice one touch, second touch, third touch, and a break above this support. One touch, second touch, third touch, and a fourth touch. And what can we see? We can see we have here our first break above. You could be a seller here. But as we can see, we would be trapped here. So this could be your first loss in this week. But as we can see, liquidity was building up again and again, right? So again, we make new equal highs with money above it. As we can see, we broke these highs. And after that, we broke our equal highs. We have our institutional move right away and a retest back in that zone, as we could be sellers right here. And again, we got our daily structure, right? Where would be our take profit? We look for equal highs and equal lows. That means that our first take profit would be below this low, and our second one would be here. Very nice clean entry as well. And I hope you like this session. It was about retail traps. As we can see, there's a lot of traps happening every day and every time. Don't try to overlook on the traps. Always look first on your higher time frame. Go from the weekly towards your lower time frame, weekly, daily, 4 hour, 1 hour, and determine the zones that you expect a reaction from. And when you have your determined zone, you can start looking at retail traps on lower time frames, like the 30 minutes or the 50 minutes, for which you prefer. Wealthy fucking moves, fam. Stay woke and create yourself.